Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday here, making it a couple of minutes past 1100 UTC. A really big shout out to all of you watching the stream live today, as well as everybody that watches this on recording. And a very, very happy Wednesday, 2nd of July to everyone. How are we all doing today? We are live for our Alt Request Wednesday. That means that we dedicate, or I dedicate the session towards charting the tickers or the instruments or the tokens, however you see them, that you're curious about. Okay, so please do let me know in the comments if you've got anything you would like me to take a look at. We'll make a note of it throughout the show and we will cover it off. As for the structure of the rest of the show, we're going to obviously start with Bitcoin, all right, and then we're going to take a look at the news as well. So do let me know if you can hear me okay and you've got all of the visuals coming through, and we will look to make a start. So before we dive into the price action on Bitcoin, actually, let's take a look at what news we have got. Hey, Erica, how are you doing, my friend? So today is an important day right now. What's quite interesting about this yesterday, and we're going to cross-reference this with the price action that's been going on as well. We had JOLTS job openings, okay. So, and we had ISM manufacturing PMI, which came in pretty decent, all right. So nothing that's going to shock the market there. But job openings came in higher, right? So just means that there's more job openings. It's a sign, you know, how you interpret the data, but ultimately jobs are being created in the US. That is a sign of a healthy economy. The fact that there's job availability. One of the kind of contrarian things that we always need to remember when it comes to the labor market is if the labor market is too strong, that can sometimes be a driver for inflation, which is why these prints over the next couple of days are really coming into focus. I'm really good. Thanks, Erica. Thank you for asking. I hope you are doing well. Well, that's the best thing to hear. I think it's been a pretty turbulent time in the market recently, although you wouldn't know it looking at things like the S&P 500 and the NASDAQ. But as we're going to cover with crypto, we really want to first understand the risk landscape as well, right? Understanding, is the capital flow there for risk assets? Now, I cover this a lot more on a Monday show, so we're not going to go into it too deeply. If you do have any questions, please don't hesitate to ask in the chats or to reach out to me on Twitter, you know, or if you're a member with us over at the Bird Nest, you know, that is absolutely what we're there for. But for me at the moment, I think this is a major catalyst today, all right, which is coming in at 1:15. Okay, so remember that's actually, so that's my time, by the way, which represents 15 minutes before the New York pre-market open. So a very, very interesting time for the news to drop. We got a major catalyst coming into the market here. If you are an intraday trader, then this should really, really be on your radar today. I know we don't have much of a Forex market here to say, like with people, with some of you I know do. Che, our wonderful Jojo, who's popped in a few times recently. But Lagarde's speaking later today for the ECB, so that's probably going to have an effect on the euro. Well, might do. It's expected to be pretty mute. Basically, they're looking to now moving to a holding pattern of just holding rates. They want to see how the data drives through the summer, a little bit like the US are doing as well. So considering that, intraday, we need to watch for this. And then as we come into tomorrow, We've got average hourly earnings month on month, non-farm employment change. Okay, again, key, seeing if the data is washing through, right? Are more people getting employed? If the jobs are available, and this is obviously not including the farming industry, right? How many people are actually finding employment? You want to see that starting to tick positive, or at least be kind of relatively neutral. Obviously, that ties in perfectly with the unemployment rate, and then we've got unemployment claims as well. And then we've just got a nice muted Friday, which I believe is actually a US holiday. So markets will be very short there on futures, and obviously some of them for traditional market assets will actually be closed off for the day. So with that in mind, where does it put us at the moment? Well, we're still in a very fundamentally driven environment. Okay, so news, fundamentals, tweets, bits and pieces like that. We're in that kind of situation where, everything can look good from a data perspective. Everything's holding very well. The capital flows are clearly there for risk assets. How that flows down into Bitcoin and into cryptocurrency has still always been a little bit of a bone of contention, right? With the most recent cycle, because of the introduction of ETFs, because of how the dynamic has kind of changed towards this, we haven't seen the kind of alt seasons that we've seen before. But what I would say about that is having a conversation with a friend of mine yesterday who had a really interesting take on this, and in my opinion is just one of the greatest minds in the space when it comes to alts, macro, CRG. And he was saying, actually, man, you know what? We just haven't hit that point yet to see Bitcoin dominance drop off far enough, to see ETH get in the ascendancy, to show enough strength against Bitcoin, right? To really see if alts have got the landscape to run. There's very few people in this space I respect more than macro CRG. So I think he's got a really, really, really good point there. We had a great discussion about it yesterday. And look, I'm not in the habit of making predictions about whether these things come true or not. What I want to do is I want to be prepared to be reactive. I don't need to catch bottoms. We don't need to short tops. We just need to understand where the order flow is going, and we just want to grab a piece of that. All right. So without further ado, we're going to really rip through some bits and pieces today. All right. We're going to have a look. We've got some requests that have come in already from some of you wonderful people. I hate it here. How are you doing, my friend? So let me just have a quick look about what ones have come in here. And do remember, please do pop in the chat if there is anything that you would like me to take a look at. Grandmaster Pikachu, hello, mate. Not Bird with you today. It's BC Ridgefield. I am head of trading for the main man himself over at the Bird Nest, but please do free to ask away. Do you ever use USDT dominance? Yeah, it's interesting. Interesting one, actually. I'm not a great exponent of it. No, I do have it on the chart just to see how it's kind of performing, the strength of it as an overall kind of gauge, more towards kind of, prosperity for beta risk assets like crypto. It's not something I'm a great user of. Ultimately in this game, it's very, very good to have good people around you. I'm very fortunate to work with a really good team. We have people like the Trading Tank who's exceptional at understanding this. So we have regular meetings as a team to understand the landscape in that respect. And I definitely bow to his level of understanding with that. I look a lot more when it comes to crypto at ETH BTC and also BTC dominance. We have a lot of historical data there, as we do with USDT dominance as well. But ultimately, as well as the total charts, are a long, long way from kind of where they need to be at the moment. All right. So that's something that we just need to factor in. But whenever you use anything like that, and we look at these kind of correlated assets that we look at to see if we can gauge strength or weakness in risk markets, ultimately what we want to do is just always make sure that we are super consistent with that. So we're going to take a look at BTC. Then we're going to obviously take a look at ETH as well. We're going to take a look at ETH BTC. Yeah. And then we'll look at BTC dominance. Yeah, see where that is. I mean, I know we've not had any major changes on that, but it is very good practice to go through those and take a look. I've then also been asked for Solana. What was the other one this week? Was Credify Finance as well, Axon DAO. So please do let me know, if you've got any others you want me to take a look at, because we are really going to dedicate a lot of time to it on the show, right? I'm going to rip through Bitcoin very quickly. We've covered the news, and then we're going to get straight into it. So without further ado, let's take a look at this. So where are we here? Weekly chart. Not going to bother going through anything historical, right? You can see that in the show from Monday where we've really set the scene. Now, for me, this is very, very simple. Price is just in a consolidation here. It's looking more and more like a bull flag. That doesn't mean that we're just going to pop and go to 200K, by the way, just for anybody wondering that. But the conditions, so the way that I work is I'm typically looking for pools of liquidity that when we establish a trend, price is more often than not going to have a reaction at those levels. Intraday, it's things like prior day's high and low, weekly highs, weekly lows, monthly opens, monthly, etc., bits and pieces like that, looking for levels where I expect price to react. So when we come to those points of engagement, I'm then looking and monitoring price's reaction, including, volume and bits and pieces like that as well. But ultimately, the prior all-time high that was set back here in January this year has been capping the market. We can see that on the weekly. The weekly candles, look, large body weekly candles coming in here, beautiful pin bar, drives it up into this. Then we start to see the long rejection wicks at the highs, right? So this is still a key level for me. Now, my conditions were really simple here on the weekly chart. Hold the weekly gap, yeah. Recover this low, and again, you can just go back and look at the previous week's live videos or the reports that go out where this is all detailed every week ahead of time for members, and also I put a lot of it in the public domain. We've swept this and recovered this level, so we expect expansion here. Why? In the same vein that when we start taking these levels, this one really isn't very clear, okay? Right, in itself as a candle. But the reason that we were short after the rejection here is the rejection wick at the high, then the fact that we left this bearish engulfing. That's our confirmation candle. Price can't get the bodies to close above here. It's not considered value at that level. So where is the opportunity for it to be considered value? Where were the buyers really piling into this? All right, which is consolidations, yeah. After we take liquidity, people really stepped in aggressively here. Price might not come all the way back down to there. So where are the other places that we expect buyers to step in if price is bullish? Gaps and lows, right? Especially when we have a low within a gap, they create great liquidity pools, right? Because you've got this self-made, or well, not self-made, but there is a huge pool of liquidity under here. People that were longing this have stops under here. Breakout traders, bots, algos in those type of systems will be triggered here as well. All right, meaning that you get a lot of sell orders flooding the market. What does that mean? It means larger players can step in, gobble up all that liquidity with minor or no slippage, fill their boots, and then trade price higher. Now, I'm always looking for a clear and obvious place for people to shed those positions, right? So as we're looking at this here, we had a nice recovery of the lows, beautiful bullish engulfing candle here, which has set this weekly order block, all right? We were looking at this play here actually on the NASDAQ as well, right? Which we've come back into and just held absolutely beautifully. So we've had the expansion. My assumption here is that price is moving for the liquidity above these highs. Now, something that we have done is we have taken the prior week's high and we failed to displace above it. So let's just mark that up on our chart so it's there, and then we can take a look at that. So you see this as PWH, prior weekly high, all right? We're now going to move down onto the daily chart and see what we were discussing on here. So let me just draw this back in. I don't know why it's not on the chart at the moment, but this is what we were looking at here in terms of our weekly order block, which is OB for order block and weekly, or whether you know it as that, or whether you would understand it more as areas of demand and then obviously areas of supply. So we've now driven into this, quite like the daily gap down here as well. So let's put on our daily levels here, right? So this was a nice area. Price drew back down into this, right? One thing that was a little bit suspect about this is we kind of took this high here, displaced over it, which was very nice because it allows us to then monitor reactions at that high, which we saw here, as price then drove up. Right now, price drove up and took its own liquidity here from this high. So revisiting of this gap, right? Hadn't been rebalanced. We saw no reaction here. So we then look for the next pools or areas lower, points of interest, that we look for a reaction, because ultimately, look, price has had a large expansion here. If we're going to hold that and turn that into a bullish trend, because we had lost structure through here, we need to remember that on the weekly, obviously, we're still bullish. So we're looking for the daily now to step back in line with the weekly. The early signs of that are large expansions at key areas of support. We had June's low down here. We know we had the weekly gap. We had a daily gap back here as well. And again, look at this beautiful reaction. Wicks down, recovers those lows, shows great strength here. So now we're having a nice reaction here at the weekly order block, right, or area of demand. If we should break back down below this level, my expectation is we come down for the daily gap. But while we hold this, ultimately price is just looking to push higher. Now, while we're kind of holding this level here, now this gap here has now been inverted. It's a very, very thin gap, right? Now, that doesn't mean that we ever discount it. It just means that when we look at it, if price really kind of moves through it without any issue, we kind of say, okay, do we have any key targets below? We do. We have a higher time frame order block and a larger daily gap. So there's a much higher probability that they're the areas that we're going to engage with next. So we're going to remove this from the chart and we're going to focus on this area here, which to do so, we're going to drop down to the 4 hour. Let me just turn the session breaks off. Okay, so again, we see a nice reaction down here, price driving in, right? We can see here rising volume. Then the volume drops off quite dramatically here. And what I like about this move is we can see the growing buying volume coming in, right? So we've got, yeah, it's only a couple of candles, but look how this shot up here, drove price in, but then sellers weakening off here. All right, buyers started to step in here tentatively, stepped in here more aggressively. We've got a beautiful pin bar taking us back above this level. Now price is expanding higher. So how do we turn that into a playbook? So quite simply for me, again, we need to regain structure here. We've had this large kind of sell-off. So what am I looking for here? Well, I don't have any gaps really until this candle closes here, which we do in about 42 minutes. And as long as it holds this area, we're going to have a really nice bullish gap below us. So there's a couple of areas that I'm interested in here. One is this. We still need to close this candle above it, right? But ultimately, if we hold here, we're either going to respect this level if we're bullish, or price is going to dip down into this gap. Which is our H4 bullish gap. So price closing here, we're quite simply then just looking to buy the dip. Yeah. If price just continues to break down here, yeah, and we get this and we close out the bottom of this here, then we know where the next liquidity target is below us. All right, if we violate this gap here on a 4 hour scale, chances are very high. Bearing in mind, we've already had the reaction at the order block. Yeah. So price has dipped into the demand zone. If the buyers are really strong here, this should be enough to propel price higher. If it comes back to this area, I don't expect price to just bounce here again. Liquidity is here. All right. I expect that to be hunted. So really on Bitcoin at the moment, looking for this candle to close, looking for this gap to remain intact, and then looking for price to pull back and see if we get some long setups. Now, what I favor in terms of long setups, as we covered previously, we did a setup for AVAX live last week, which only ended up being a small win. Ultimately, the market did turn on us and we did get that taken out. But just by understanding the key levels that we wanted to be involved and the triggers to seeing that allowed us to at least book a little bit of profit before price came back. So that was very, very simple technique, because if we want to go long, we want to see obviously price engaging with a higher time frame level, right? So let's say, for example, this gap here. Then we want to see a local low made, or I want to see a local low made. I then want to see that low swept. I then want to see a strong expansion move higher. Yeah. Leaving gaps, displacement. Why do I want to see gaps left? Well, the gaps tell me that there was aggressive buying. All right. So henceforth, if I see that, then I can kind of say, okay, like this gap, if it's left here, aggressive buying. Yeah, look, aggressive buying stepped in on this gap, but look at the rejection of the high. What does that tell us? Well, when we then invert the gap, which we did at the top here, showing weakness, a good size gap here, inverted, then it doesn't matter if we lost money on this move or not. We saw price come up here, right? Large gap created. We looked to long this. I doubt you would have got any long setups in here as price knifed straight through it. Then look how price then dips back into this area. This is classic mitigation, right? This is people that were long here or late longs. They're holding through drawdown here. Price comes back towards their level here, allows them to close out. Ultimately, then you can see, look, buyers tried to recover the move here with this long downside wick. And then this one here, the engulfing, then told you they'd lost that battle. You can then look at the volume here as well. Look at the large volume, red volume spike here. Look, and it's a long downside wick. So buyers really stepped up here. You've got a huge, gigantic red volume spike here. All right. And then look, you're buying volume lower, 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 and then selling obviously steps in aggressively. All right. So the reason I wanted to go through that is because, often when we're wrong about this, we're saying, okay, aggressive, buying steps in here because it gapped. It's the failure to order pair. So you think about it almost like the market getting overwhelmed with buy orders, and that's how you get things like slippage. So then when that's incorrect, we then get a little signature from price in that in terms of this inversion. So while we're leaving these gaps, this is telling me buyers are active here. So I want to look for price coming back. I imply the same methods then on the entry technique, which would normally take place on a 15-minute, or for very aggressive, it would take place on a 5-minute, which is price dipping into a level. So let's imagine that this gap here is what we're talking about, right? So price here has kind of come into our level, but then this is on a 15-minute chart. We see price run in aggressively. Then we see this big expansion. And what I really want to see here is a gap formed. All right, so a bullish gap. Yeah, I do it in green for this one. I typically have bullish or bearish gaps as gray on my charts, right? So we've got a structural shift. We've got volume coming into the market. We've got gapping, all of these things telling us that buyers are potentially stepping in. I'm either then looking to get involved in the market at a pullback to this level here, all right, so to the gap, or I'm looking to take the breaker line, right, which is something that I've taught for a lot of years, right? Just a very simple way. Take the high that swept the low, yeah, then you see the impulse move above it. So these people are then wrong, caught offside. You've got the squeeze, and then it allows them to mitigate here and then jump on board with the trend. So that's a really good one here. And ultimately, look, the breaker line is just the top line of what would be a breaker candle as well, right? Which is the technique that we use to enter on AVAX, right? So that's all I'm looking for. It really, really is that simple. The key thing here, in my opinion, is understanding the market dynamics in terms of the risk bid. Are we in an environment that's looking supportive to risk? So what do we do? So I'm opening the chart here. I'm going to move myself down to here. And we can see that we've got the indexes all currently up, all right, only marginally, but they're nice and green for the day. Obviously, crypto's green for the day as well, which is a really good thing to see. USDT dominance, as our friend Grandmaster Pikachu was asking about earlier, we can see that that's down for the day. Again, if you're looking at that as a counter-correlated risk gauge. Now, what I'm looking at here are a few different baskets, right? So first of all, I've got the Magnificent Seven on here: Apple, Microsoft, Amazon, Google, Meta, Nvidia, and Tesla. These are such a massive part of the NASDAQ, the S&P 500, that they are, massively supporting the risk bid for the indexes that are blowing, all-time highs, well, the S&P 500 and the NASDAQ. And then considering the bond markets, but that's a little bit deeper kind of consideration for this. The key areas I'm looking at are here. So typically, if gold is running hot, if the dollar's running hot, if the VIX is elevated, these are cautionary warnings for risk assets. Does it always work that way? No, it doesn't, but it's something that we need to factor in. The other thing I'm looking at here are risk on to risk off currency pairs like Aussie JPY, New Zealand JPY, right? Because if we take, say, for example, the Australian dollar versus the Japanese yen, you're talking about a risky commodity-driven currency, high-yielding currency, versus something like the yen, which is the complete opposite of that. So what you want to see is prosperity in the risk currencies against the safe havens. It shows you that the major investors are happy to allocate more towards risk, and ultimately that's always a good thing historically for cryptocurrency. All right, now obviously that's not to say, okay, these are green, just going along the hell out of Dogecoin or something, right? We need to kind of factor this in, because again, things like Bitcoin dominance do come into play, but we're going to cover that in a moment as we look at alts. So the risk outline today, looking at it purely from an intraday perspective, is looking kind of okay. It's a little bit of a mixed bag. Equities are up, crypto's up. We also have, bullish price action currently intraday on gold and, those proxies that we will use to kind of paint more of a risk off scenario. So, as price grinds now towards in the next kind of hour and 5 minutes, the pre-market open, or actually 50 minutes from now, will be probably more telling when we get the news print. So what do I expect from that? Well, I expect some kind of reaction. Price from here can obviously do one of three things, really. It can to run incredibly hot, not pull back and give us any entries. I agree as well, Jojo. I do think it's looking good here. And I am well. Thank you. I can't speak for everyone. Hopefully everybody is well, but it is great to see you on the show as always. So yeah, simply price could just completely take off if we got like a really positive print. If all of a sudden people are just turning on the floodgates for risk assets, the NASDAQ's running really hot, etc. If risk catches a big bid, there's always a chance Bitcoin can take off, but it doesn't. It's nowhere I'm interested in getting involved in it then, intraday or otherwise. The reason for that is because I want to be a buyer on the dips. I don't want to run into already fast accelerating price action, because there's a chance that I'm then on the wrong side of that and that I'm reacting more emotionally rather than technically. Okay, so pullbacks to here I think are for buying for me, and as long as we close within this gap in the next 33 minutes, this area here, yeah, the 4 hour is also very much for buying. But like I said, we need to still get triggers at those levels, right? I'm not blind bidding these areas. So that's where we are with Bitcoin. I think Bitcoin looks okay here, right? Like, I think it's looking decent on the daily. I think the reaction today is incredibly strong. Just see if we've got any more news coming in. But Standard Chartered reaffirms 200k year-end Bitcoin forecast, citing ETF flows, corporate treasury demand, and policy tailwinds. Bitcoin seasonality, why summer 2025 will catch everybody off guard. Who's selling Bitcoin at these prices? Glassnode reveals Bitcoin profit takers. All right. So you're going to see a lot of these kind of news headlines and bits and pieces. But ultimately, if we want risk assets to perform well, we need to then not to be rising interest rates and inflation concerns. We need GDP to remain stable in the US, right? And, you know, if we then get rate cuts, ultimately the US needs to refinance a lot of their debt by 2026, which means that we're going to see them obviously doing treasury buybacks and bonds. That market needs to be lower, which is typically then quite good for risk assets as well. And the other thing that I'm really watching at the moment is we do have Powell, who's head of the chair of the Federal Reserve, stepping down next May. There's a lot of talk about Trump putting an extreme amount of pressure to get Besson in there. If he gets his own person, his own pick in charge of the Federal Reserve, then I don't really know what to tell you. I don't think it's great news for the future, because I think you're pushing that risk further and further down the line, which will be evident looking at the 30-year bond yields, right? They'll have to have yields will be very high on that, because they're going to have to be rewarding people quite heavily for taking on debt that far in the future, when the US is already at 128% of its GDP. So, you know, debt to GDP, meaning, you know, obviously what it says on the tin. So while we're in those conditions, best to not overthink these things and just think, okay, let's look for the good opportunities and areas that we can be a buyer. Ultimately, while we hold this gap here until we close below it, then I have absolutely zero interest in longing if we close below here, unless we come back above it. So if we close below this here and the next candle or two close back above, I would invalidate this. We would see the higher low set, and then I'd be looking for price to push up aggressively. However, if we close below this, the majority of the time, it means the price is then looking to push lower, right? Because if we look at these reactions within gaps, look at this beautiful long downside wick. And we remember my rubbish analogy about the hot water test, right? We've got 2 pans of water, one boiling hot, one tepid. You've got a blindfold on. If you put your hand in the boiling pot, you're going to pull it out pretty damn quickly, right? Because you don't want to stay in there. Think of that as value, right? This is getting pulled out really quickly because the buyers have stepped in so aggressively. People are saying, no, this is value at this area. I'm going to step in and I'm going to buy big. I want that on my balance sheet, right? Versus if you kind of step into a gap and, you know, you're kind of lollygagging around in it a little bit, like this one, this bullish gap here, right? So we kind of held it here, but we rebalance it to there. And then look at price, kind of a little bit of a bullish candle here, rejection wick here, up and down. It's tepid water, right? Meaning that it's less likely to act as support here. So when we break down below it, then we look to the next liquidity pools here to be the draw on price, where it can then find its value, okay? So let's move on to ETH. Remember, guys, girls, if you've got anything that you want me to put on the charts today, please do let me know, and we'll make time for it at the moment. We're going to do ETH BTC, BTC Dominance, Solana, Credify Finance, and Axon down. They're the ones that we've had requested so far, so please do let me know if there are any others. Right, so go to our messy crypto chart, shall we? We really have started to clean these up a little bit. Probably doing a little bit of a better job over time, right? But look, weekly scale, very similar thing. Big weekly gap down here. The charts are a little bit more colorful because just for indicative or for illustration purposes for you guys. Big bullish gap here. What do we say about that long downside wick? We see the absorption. If you wait for the secondary candle here, we can see that that has closed as a bullish engulfing candle. It's inverted this gap here. It's showing a strength. Where was our concern here? Well, it was this bearish gap, right? And then when we closed above this here, I'm then looking for this area to offer support. But look how we violated it and closed below. Remember what I just said on the last time frame. That means that now has no place on our chart, right? We didn't close below that either, so that doesn't. So this, by the way, was the 50% Fibonacci retracement. So that was our first target. from longing off the lows. And this is the secondary target, which is the golden pocket. However, as we explained, we need to conquer this gap here, which we did, and then we inverted it and went back below it. So it now doesn't really hold much worth to us, but this one here very much does. Yeah, so this is our bullish daily gap. And just look at this reaction here. I don't know if you remember recently we were looking at this, how, and this is, we'll see this on the 4 hour, right? But you've got these, you've got a low here and a low here. Whenever you see this flat kind of liquidity or trend line liquidity, right? You want to look at how price attacks that. There's a lot of stop losses there. There's a lot of ways that the price can just magnetize towards those areas, and market makers as well. For example, we need to factor them in. That's why gaps are so important. So this is a really nice initial reaction here from price. Dipped into the equal lows. Look how it, again, hot water test. Price so far has seen a really nice strong reaction off of here. So we're going to use the 4 hour to really kind of put this in perspective. This was the gap that we were looking to hold. Unfortunately, that didn't take place. So we need to draw this across now, and this has now become a gap inversion, right? So this has gone from what we wanted to see offering support. But even with this one, right, look, it kind of, long downside wick, it's okay, but it's spending a lot of time in this gap here, right? We get the expansion, which is great, but as soon as we step back into this area, look how quickly it just dies away, violates it here. Now we need to be careful here. If I was looking for a higher probability setup, I would say probably now the violation of this gap, right? I think price action looks pretty good at the moment. We've obviously got this consolidation here. If we also draw out, if TradingView is going to treat us to it today, is it? A little bit slow at the moment, TradingView. People obviously gearing up for their crypto punts, right? So not really, you know why, it's just my fault, because we're on the crypto chart, you've not got the volume. But basically we've created this nice tight range in here, right? And at the moment, price is just ping-ponging around either side of the range. So in moments like this, you want to just see these nice high volume breakouts above here. Now, we do need to be a little bit cautious because we do have the golden pocket here. But I think if we're starting to really find support down here at the 0.5 after a relatively strong rejection, then, taking positions closing above here and looking to build intraday positions to the golden pocket, yeah. So price gets up here, you wait for it to establish itself. Lower time frame, obviously, look for those entry patterns we discussed, trade it up to here. By that point, you've secured your risk. Then you want to kind of see these key gaps or order blocks hold when you get that initial rejection. If you do, price might just kind of bomb above it. Then we want to see this. We just want to be playing this level to level at the moment, or I want to be playing this level to level at the moment, all right? You don't know if those major news catalysts are going to kind of turn the market, but ultimately we want to be seeing resistance turn to support, right? We want to see these areas kind of carved through. So I've got a really good playbook here. Now, if I wanted to be long ETH, I would have needed to do it last night at 1 o'clock in the morning. I wasn't at the desk then, right? But that was a good opportunity to long ETH. I know some of the team did, for example. I know Pitt, bless him, missed his entry by absolute fractions on BTC. But here's the place to be long. Here's the place to be cautious for me. Get back above this and then look to long it up to here. While we're here, am I actively interested in shorting this? Not really, not while we have strength in the risk markets. But obviously any deeper correction here, if we got a daily close below this bullish gap, my expectation would be for price to push down towards the 2115 level, okay? Let's take a quick look at ETH BTC. No, let's start with BTC dominance. Right, so this was the hopium candle. We had this long serving trend line all the way through here, right? And this area here is the real area we want to see price starting to get below, for historic kind of alt season levels. And we can see we're a long, long way away from this at the moment. Now, I'm not your key kind of trend line guy, I have to say. Not my area of specialty, right? But because what I'm looking for here is I'm just looking for, look, if buyers are stepping in along this axis, price is coming up, buyers stepping in, then everybody can see that, right? If you're then getting a strong high volume breakout below these kind of things, and obviously, we're not on a tradable chart here, that's not what we're doing. We're looking for weakness to come into this. And I think really we don't need to go into this any more than what we can see, which is just a lot of strength here. So Bitcoin's still really kind of gobbling up the market as it stands, right? So if we just take a look at ETH BTC, this is what we've been looking at here. We kind of had this, we've had this expansion up. I mean, look, the last time we had anything even remotely like this, and it never materialized, was this much smaller gap here. And look how it was immediately violated, this gap here, and price ultimately sold off, right? Last time we had a decent sized bullish gap was this. We saw a couple of reactions here. Again, look how price is kind of dawdling around in here as it starts to break down, an immediate fail on our hot water test, right? So what I want to see here is some continuation of this, right? I know this is a weekly scale, but this candle's driven in here. We've then had a little bullish candle here. I don't want to see price coming really back down into this area. I think it's just going to show a little bit more weakness. Need another higher low test on ETH. Yeah, that would be interesting for sure. And grab, yeah, sure, we can take a look at that for you. So not really much more to say there. Obviously, if we want to take a more kind of granular view here, we were looking at how price was, suppressed below the bearish gaps here, which it remains. We've still got this one above it as well, right? But look how the bodies are just respecting this area now. But again, look, price is spending a lot of time in this gap. We've rebalanced it. We just haven't inverted it, right? So we haven't closed above it. So actually, the fact that it's spending quite a lot of time in here could be a positive sign, right? That we're about to see some form of movement. But I think this will tell us a lot. I think a strong breakout from this, we see more strength coming into ETH versus BTC. Ultimately good for alts. We start breaking down and closing below this. I think this is going to grind its way lower, and that doesn't really paint a good picture for alt season anytime soon. All right, so let's take a look at Solana. Because this had a really, really good rip recently, right? So I know this is arguably one of the messiest charts here, right? So let's do this. Let's do this instead, right? It's just getting too overcrowded. Now, the reason for any of you that don't know that all of this is on the chart is because ever since I've been doing this for a number of years now, these have remained untouched, right? I only ever remove any of the items on there after they've been drawn live on further live shows, so that we, there's accountability for the TA. So, okay, let's look at this. So now we've got a nice clean chart, right? I do really like starting with a clean chart. So if we look at this on the weekly, does the weekly immediately tell us anything of interest? Not really. We kind of came back down. We had this gap here that we were looking to support. So price hasn't done that. We obviously closed below it here. Beautiful retest. Now price is selling off. I would expect price, just looking at this chart, just purely on a technical basis, to come back down to either this low here or this low here, right? The reason for that is we're continuing to reject here. Price closes back above this, then this high becomes the target, and ultimately the higher highs above. So on a weekly scale, that's really super clear for me at the moment. Now, if I'm expecting price to push up here, and whenever we're engaging a gap, right, price came up to retest the gap here after breaking down and rebalanced it to here. A close above on a daily scale does not invert a weekly gap. You need to see a weekly close on a weekly gap, right? Alex, hello, mate. Hazardous to some. Great name. Welcome, buddy. So if I'm looking at this here, and actually I don't want that. What I want is this. Right, we've got a bullish gap here currently supporting price. We had nice expansions, right? So look what's coming. Price is coming off the lows here. Yeah, look, one strong bullish candle in, bearish candle in, holds the low. Doji candle, indecision, yeah, expansion. We set the bullish order block here. Remember, this is on a daily scale, so this is our order block daily. And we're now within another bullish gap. So for me, this is a nice area to long, and I don't really mind longing here because, yes, we've got resistance above, but the immediate resistance, in my opinion, is capped. Look, the whole area here has had price travel through it on the lower time frame. So my focus is very much on, where are the key liquidity pools left in this area? So to take lower time frame trades targeting this high, as long as we hold this gap in this order block, for me is absolutely fine. On the 4 hour, we can see we had a pretty strong move down here lower. If I wanted to break this down further, I would be using this gap as my conditions at the moment, because we've got a bearish gap here. Now, price on the time frame here has taken liquidity, inverted this large bullish gap here. Remember, 1, 2, 3 big candles, meaning that we're now looking for the next liquidity pools lower. We had this low here, we've had this gap here. Price has ultimately found support of this gap, which sits within our higher time frame gap, right? So it makes sense. We can also see the order block sat here as well. This is where we want to start building confluence, all right? So now we're starting to see a little bit of something here, but in truth, if I wanted to be a lot more certain about my long position here, I would want to see this. I would want to see a 4 hour close above this, inverting this gap, turning it from support to resistance, meaning that then when we come back across here, we look for this area to get retested, and then our lower time frame entry method, all right, where we look for that structural shift, volume, energy moving into the market, and then we've got a pre-made target up here. And once again, look, when we get there, doesn't mean that we're then just out. We're just building these positions cautiously at the moment. At that point, we can take some profit. We can move our stop to entry. If price comes back and takes us out, no problem. We've made a little bit of money and we can reassess, right? But instead, once we've taken profit here, we can then wait to see if price can kind of hold these key levels. Do we then get another opportunity? If we do, great, we take it. We can then pyramid into this or compound into this position and look to trade it higher, all right? Ultimately controlling our risk in what has been a very turbulent landscape at the moment, okay? So for me, that's the plan on SOL. I want to see a 4 hour close above here. Again, if I was really looking to scalp this, all of this happened late last night when I was off. But again, I really like these areas for reactions. But on a lower time frame, you want to be quite aggressively in and out here. Well, I do anyway, because I don't have any structural confirmation or otherwise here on the 4 hour that price is, this at the moment looks like a great dip, right? We don't know if this is now a lower low, setting a lower high for price to sell off. Price coming back above this would be showing strength in an area that is pre-made and set up for sellers to step in, all right? So if we see that offering weakness, then we can trade it higher. So pretty clean plan on Solana as well. Right, so let's have a look. What were we looking at with Creddy? Were we on this one? Yeah, it must have been. Okay, so this was for our friend Marcin and Urgen, who have asked for Credify Finance. I know this is something that I've been invested in for a while. Just to really kind of break it down for anybody that doesn't know this, typically I work as an intraday trader, right? That's my specialty. I have a wonderful trading team who work alongside me, who do everything from swing trading, position, algorithmic, fundamental. But if I'm looking to take positional trades, these are trades, for example, with this that I'm looking to add to a spot portfolio, then I'm really looking for these consolidations that led to large impulse moves. Yeah. You see when price returned to this here, look at that beautiful rounded bottom, and then price shoots up. So this is the first area that I highlighted on the recent breakdown to be a buyer. So the red line, yeah, is places that I add. Blue box here, I added here. Price literally broke down straight away afterwards, but I said, look, it's fine. Just don't panic in situations like this. I said, I'm a buyer here, I'm a buyer here, and I'm a buyer here. At what point do I sell it all? Well, I don't. I look at the market conditions, the research that I do into the company, the team, the fundamentals, everything like that goes in. Unless there's a significant change to that, I'm just looking to stack up on these as the price gets lower, right? Obviously, in the expectation that in the future, the price will once again be higher. And if we're looking at this from a risk to reward perspective, if I'm investing in this today, yeah, this has over 1,000% upside to its previous all-time high. Maybe it doesn't get there. Maybe it only kind of gets to here, but that's still 300%. So that allows me to be, quite flexible with that. Alex, hello, mate. It's not an entry price, unfortunately, my friend. What we're looking for is for a 4 hour close above that gap that's above price action on Solana. A good kind of entry level for, to play those bounce trades was a little bit lower, and we've kind of seen the initial part of that move play out. So we want to be a little bit cautious here, or for my style of trading, I'm a little bit cautious here, and I'm looking for price to then get back above that gap. I would then look to decant that down onto a lower time frame, something like a 15-minute, to look for that kind of liquidity sweep, nice expansion, and then look to get involved that way. I got loads of bits and pieces like that. I've got a great post pinned on my Twitter about looking for inside bar patterns as points of entry and range plays, as well as a lot of other stuff I share. So please do free to take a look at that, and you can find down in the description how you can join us over at the Bird Nest as well. And I think we've got some really great summer deals about to come out as well between you and I. So do keep your eyes peeled for those. Right, so Creddy, what's the play? Hang on one second, let me just check the time. Beautiful. So I still really like Creddy, and I really like it at these levels, right? So this is the weekly. Look how perfectly it holds this line. If it comes back to here, excuse me, I'll probably put some orders to wick on this wick here or just above it. It's around about 0.0029686. All right, because I'll be looking for price to run down into that. And then I think we can have a good reaction here. Ultimately, this is a long-term play for me, as I've said all along. So as price kind of grinds down lower, I'm kind of happy with that. Now, this little box here is our breaker. And we were talking about on a daily scale, if I wanted to have a real aggressive entry here, the breaker candle here, the up close candles as price swept liquidity. We've got a nice run at this liquidity here. Then we set these two nice bullish daily candles. All right, this was from the show on Monday. So if we have a large expansion above this and then a retest, then that's going to be a good area to enter for me, right? Unfortunately, we didn't get that. Price did reject. This area did, for want of better terms, do its job. However, we can see the up close candles before the purge on liquidity here exist in the same place. So really, I'm quite happy to kind of keep that as the TA on this one right now. What we can see here, it might look a little bit messy, but ultimately we were just identifying these similar areas previously as we were looking to take these shorter term trades, which, as I've explained, I'm not swing trading this, right? I'm adding this to my portfolio. So lower prices for me is a good thing. I think if we get back above this level before re-engaging with these lows, that's a real sign of strength, right? And then if you're looking at those assets that are showing a little bit of strength when the market's fairly turbulent, quite often they're going to be quite good runners for you, all right? So in terms of credit, really like it here, looking to add some more around these levels. Like I said, I'd probably be focusing down on these wicks here. Let me just draw this in. Yeah, and I would move that. That's 0.0028248. I would move that up a little bit, all right? Because we've got a lot of flat lows around here. So if I wanted to add anything in, then I look for a little run on those, okay? So credit looking really good there. What was the other one? Axon Dow, wasn't it? We have this one on here. Here we go. Right, so let's take a look at the weekly. Again, another really good project, another really good team, super community, great backers. I just think, projects like this, you've seen it over the time with a lot of technology projects, right? These big peaks and troughs. Ultimately, where people want to buy is here. Where most people end up buying is somewhere up here because they're waiting for so much confirmation. Now, I can't give you guarantees on any of this. None of this is financial advice. But for me, this still holds a lot of interest in this area. This consolidation area here, we saw lead to this massive run up here. This is fighting massive market pressures at the moment, as is most crypto, right? So that means that the money just isn't cycling into them at the moment, all right? No, grab coming out next, mate. Almost there, I hate it here. So, while this is still here, if I wanted any kind of confirmation play, then you do need to wait for these kind of expansion moves, or I do. In which case, then I look to enter on the gaps, right? So if I was holding from down here and I'm adding to the position here, when I see these large expansions and then I see the large gaps appear like this, then I'm really happy to add in these gaps, right? Then you kind of see those moves to the high, and ultimately I take a little bit of profit on the way up, right? Really good way to do this is wait for your profit, wait for your investment, if it gets there, to do 3x, and then take your initials out. That's a really, really good way to do it. So we haven't seen those large expansions yet, so we could wait for that. Ultimately, I've added here, right? This was a major add for me here, and I was invested from higher up as well. So I've brought that overall average buy-in price right down, okay? So like I said, really good spot bag for me here. On a weekly scale, we can see, the pressure's coming from above at the moment, but actually price kind of holding this level here We've had this kind of indecision candle here, which has left an inside bar pattern. All right, these are indicative of points of indecision. We had one here, for example, price broke out down below the low, couldn't get back in the range and sold off. So that's what I'm watching here. If you want to know more about that pattern, you can find it pinned to the top of my Twitter account. Now, on a daily scale, quite simply, we were looking at this. Right, price coming in, sweeping out the lows. The first area we wanted to see price show strength was here. Price came up, initial rejection. Again, look, one rejection here. Then it creeps back into the gap again, shows a little bit of weakness. Then it's back in again. And okay, we get the rejection candle here. But when we closed above this here, then for me, that's showing resistance with the potential to become strength. I then really liked how price drew down here and then closed back above, or didn't close above, but came in, closed just slightly below, but still holding this area. When we violated this to the downside, as we covered on the other ones, it proves that this was incorrect. So this now moves out of the way, and we have to look for the next point of liquidity lower down. Oh. All right, where is that point of liquidity? Yeah, it's here. I don't know why TradingView is being a bit of a twat today, but let's see. There we go. Right. So what have we done now? Well, we've swept out the liquidity. We're not interested in this gap here, right? So as long as we go to show strength here, then this can be a really good opportunity to get some buyers in, right? So again, looking at this as I'm looking at it, you know, adding in this area is fine. So I don't really need to be that technically proficient with that. But if I'm looking to swing this, then this is where I want to see price. All right, I want to see price close above these three down close candles here. All right, if we're looking at this here, the rising volume coming into this level, yeah, and look what happened here as price was trying to make that recovery. Something that made me really cautious here when we did see the inversion was the fact we did it on lower volume. Yeah, quite often when you see these inversions take place, yeah, so see this bullish gap here, this is the candle that violated it. Look how it was higher bearish volume than the prior candle. It's showing that the push is really, really there and that the bears are in control. Yeah. So that's what we want to see here. We just saw falling buying volume. Yeah. So there's always a point to be a little bit cautious. Now we've seen rising sell volume. What we're looking at that as we saw here, is this could be added pressure forcing price to come down to a point of liquidity before it recovers. If the market conditions remain favorable for risk and we do see that capital flow down into riskier assets like we do with alts, some of these are really going to pop. And that's where the fundamental and the news drivers really, really take place. And I really like this here, but I would look for this order block here to be set at 0.07732. Close above that, retest to this area, then I think personally it will provide some good buying opportunities. Right, so let's take a look at Grab Holdings. What have we got here? Okay, this is an interesting one. Wow. Okay, well, I mean, this is super interesting. I mean, you very rarely see price action like this on crypto, right? You got this real key level around here, right? You know, give or take, you probably add it a little bit lower down into here and probably take this down onto maybe the bodies here. But give or take, you're just trying to identify where are these, right? Resistance, 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 resistance. Yeah, initial resistance. Then what happens? We get that really nice close above here, right? And look, you can bet your bottom dollar it was done on high volume. Yeah, look at that volume spike. That's what you want to see as a breakout trader, right? The opposite of what we just saw, obviously, as we were taking a look at Axon DAO, which gave us a really good idea. Yes, mate. Yeah, hopefully this is the one that you're on about. So the one obviously over on the NASDAQ. Holding this level, nice reaction back here at the retest, really kind of struggled to make its way through here. We had a large, inefficient move down here that then led to this massive consolidation. What I like about this is it looks like a really nice kind of breakout and retest at the moment. The key thing we're kind of asking ourselves here is, did the buyers really step in here? We saw a large upside wick, and look, rising volume here. Now, it started to consolidate a little bit here, but on a weekly scale, I am all about this gap. All right. weekly bullish gap. That's what price has dipped into. Again, I wouldn't really want to see price come back down into this gap now. And if it did, I'd be super interested to see how it reacts at this low. I'd want to see an aggressive reaction at this low. If we got something like a nice bullish pin bar candle here, or maybe like a morning star pattern or something like that, then I think price can really kind of run from here. Again, if we start closing below this here, we've kind of retested this area again already. I would assume that price is then looking for liquidity lower. So we would have to see a really strong reaction down here. At the moment, it's a breakout, it's a retest. Price is trying to gain momentum to the upside. We've had a structural shift in that respect after taking out this internal high here. So as long as this holds, then the other thing I'd have to say is we've got some really nice trend line liquidity here, right? Look how kind of perfect that is. So if price runs hot from here, I want to see a high volume breakout above this area, a retest of this, and then I look to jump on the gravy train with you, I think, mate. I think this has got a lot of potential to really tear some faces off, because this whole inefficient move down here, so this massive drop, huge consolidation, I think if this thing wants to go, then it can really, really go. Again, we're seeing market conditions look favorably at risk at the moment. So, you know, let's just not try and overthink this, try and kind of plug the technicals in with what we're understanding about the economic landscape as well, okay? Kang Long, hello back at you, my friend. So we've actually finished in a reasonable amount of time, 3 minutes till the end of the show, which is quite nice. I'm normally rattling on quite a lot longer. If nobody else has any chart requests, then we will call it a day there. Hopefully it's been interesting for you. Please do reach out and let me know if you do have any questions. Remember, you can find me on Twitter. I share my Twitter name on here, same thing as it is. But please do pop along, give me a follow. I share a lot of free content. You can always reach out to me with any questions as well, but do check down in the description if you are interested in joining us over at the Bird Nest for anything. And apart from that, just really want to wish you all a fantastic week ahead. Please do keep an eye on the news today as well. Like I say, I think we've still got some important news days coming up today and tomorrow, with the first bit of that news about to drop in about 17 minutes from now. Okay, so let's be prepared for that, especially if you've got any open positions or if you are trading anything intraday today. And I hate it here is a good company. Take a look. I will indeed, my friend, and thank you very much for the recommendation. I'll certainly pass this on to the team as well. So wishing you all a fantastic week ahead. Do trade safe, do trade smart. Remember, don't have to risk your capital most days. If you are sidelined and your system just really isn't getting those triggers, then you're probably ahead of 90% of the people who are aping into the market and losing money. All right. Have a great week ahead, everyone. I look forward to seeing you all around the nest.